Two people start with the exact same $10,000. One buys a rental property, the other buys index funds. 20 years later, one of them has almost double the net worth of the other. But here's the twist. It's not who you think. Stick around, because by the end of this video, you'll know exactly which path fits your money and which one is quietly a trap for most people. The myth. Everyone's uncle has a real estate story. I bought a duplex in 2009, and now it's worth triple. And everyone's cousin has a stock story too. I put $5,000 into Apple back in the day, and now I don't have to work. Both stories are real, but they're also survivorship bias. For every winning story, there are quiet ones you never hear. The guy who bought a rental and got stuck with a tenant who trashed the place. The guy who bought a hot stock right before it crashed 80%. So, let's skip the anecdotes and look at what actually tends to happen on average over time. The numbers. Historically, the stock market, specifically the S&P 500, has returned around 7 to 10% a year on average, before inflation. Real estate, nationally, closer to 3 to 5% a year in pure price appreciation. On paper, stocks win, easily. But here's the part most people miss. Real estate has a secret weapon: leverage. Here's where it gets interesting, because that one word, leverage, can completely flip the math on its head. Let me show you how. The leverage effect. Say you buy a $200,000 rental property. You don't pay $200,000. You put down $20,000. The bank covers the rest. Now imagine the property goes up just 5% in a year. That's $10,000. But you only invested $20,000 of your own money. That's not a 5% return. That's a 50% return on your cash. That's the magic. And the danger of leverage. It multiplies your gains. It also multiplies your losses. If that property drops 5% instead, you just lost 50% of your investment, on paper. So real estate isn't automatically better. It's simply a different kind of bet. A leveraged one. The liquidity advantage. Here's what nobody tells you about real estate. It's illiquid. You can't sell a fraction of your house on a random Tuesday because you need cash. Stocks? You can sell in seconds. That liquidity is worth more than most people realize. And real estate isn't truly passive unless you pay someone to make it passive. Tenants, repairs, vacancies, property taxes. All of that eats into your returns and your weekends. Stocks, especially index funds, are about as close to set it and forget it as investing gets. But before you write real estate off, there's one thing it does better than almost any other asset class. And it's the reason many wealthy investors still swear by it. The tax advantage. It's called depreciation. The government lets you write off a portion of your rental property's value every year, even while it's going up in actual market value. That can shelter thousands of dollars of rental income from taxes. Stocks don't really have an equivalent unless you're using specific retirement accounts. Now add something called a 1031 exchange. It lets you sell one property and roll the gains into another without paying capital gains tax right away. That's a powerful advantage. And it's one of the biggest reasons experienced real estate investors keep building wealth over time. The final verdict. Here's the honest answer. It's not real estate or stocks. It's what most people who build real wealth actually do. Both. Stocks for the passive, diversified, and liquid part of your portfolio. Real estate for the leveraged, tax-advantaged, income-producing part if you actually want to deal with being a landlord. If managing tenants isn't for you, you can still invest in real estate through REITs, real estate investment trusts, that trade just like stocks. The people who lose aren't the ones who choose real estate or stocks. They're the ones who go all in on one, without understanding the trade-off they just made. The smartest investors don't chase one perfect investment. They build a portfolio that works together. If you found this video helpful, hit like, subscribe, and tell me in the comments. If you had to choose just one, would you invest in real estate or stocks? I'd love to hear your answer.